Hello guys, Randy back again here with another video. Guys, I am back. I don't know if you guys knew, but I was involved in a car accident 2 months ago that almost claimed my life, but God is great. I mean, I'm not gonna go into the details because this is not the video about that. But yeah, I just want to let you guys know that I'm okay. I'm finally back, and yeah. So let's get to this video. Okay, guys. In this video, I'm going to talk about how to always hit your TP. Okay, this is really going to help you for people that are actually struggling with holding their trades. Okay, it's actually going to help you hold your trades to your TP. Okay, so I usually use my Fibonacci extension, Fibonacci zones as an area for target for profit taking. Okay, there are only two Fibonacci areas that I use. Okay, which is number one fib area is the 100% zone. Okay, the 100% zone, and my second TP is always the 161.8. But these days I've only been using the 100% zone. I don't really use 161.8 that much unless I'm really swinging and I want to hold the market for like a week or something. Okay, so now I'm going to break the market down. Okay, so I'm going to place a weekly line, okay, for last week. Okay, so place a line right here. Okay, that's Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. Okay, so this is all. Let's forget about this. Let's just focus more on what happened here. Okay, so remember, I trade a smart money concept. If you don't know about it, I mean, there's plenty of videos on YouTube that talks about smart money concept. You don't necessarily have to learn it from me, but if you're interested to learn it from me, then I'll leave a link to my Discord in the description. Okay, so we can clearly see that the market structure for last week was bullish. Okay, I mean bearish. Okay, like actually the overall direction is bearish. Okay, the bears are actually in control of this market. Okay, in like the higher time frame. Okay, then we had this little move up, which is, to me, was just a pullback. Okay, and then now you just recently started going back to the downside. Okay, so boom, we had a lower low, lower high, lower low, lower highs here, and lower low, lower high, lower low, and then we had a move up like this, and then market dropped again. Okay, so what I'm going to focus on is this order block right here. Okay, remember, this was a really tricky market to trade because you would have targeted this order block. Again, the market pierced it, or like you would have targeted this as well, because you as you can see here, there's an impulse, and this would have been like a mitigation. You would have probably looked for entry here, but then remember, guys, you always look for confirmation before you can sell. Okay, so some people enter here blindly. They got wicked. Okay, they got burnt. And then here again they got burnt, but the market was going for this order block right here. Okay, no, actually not that order block. It was actually going for this order block. It came back for this order block. Okay, so boom, I'm gonna mark that order block. Okay, price drop. Okay, place my order block, and also place like my 50% line. I always place my 50% line because that's very important. Okay, this is for a street trader's perspective, by the way. Okay, we got that impulse mitigation back to the zone. Okay, so as we got back to the zone, what I like to do is I'll jump to the M15 time frame, and then I'll look for my entry. Okay, we can clearly, this is that mitigation move. Okay, as price was mitigating, creating high high, higher low, high high, higher low, what I would have done is I would have placed my trend line like this. And also for like sniper entry, I like to take it at the 50% area. Okay, you can clearly see that price, as soon as price touch the 50% area, that's when they reverse from. Okay, so now you got to understand why did that happen. Okay, so you can clearly see that here market was bullish. Okay, bullish, failing to break these lows. I mean, failing to break this low. Okay, yeah, this lower low, this lower high, sorry. And then boom, as we got here, as soon as it touched the 50, they're starting to struggle. Okay, and it made a final high, failed to break this high, and close below it. Okay, as soon as it closes below it, after touching the 50% line, to me that's a great entry. Okay, so I would have entered the market right here. Okay, stop loss probably here. Okay, my stop loss would have been here or here, but like here for like, if you're going crazy, okay, I would have placed my stop right there, okay. And then boom, after I enter the trade, now here comes the target, the target part, okay. I would take my Fibonacci from the low point, okay, from the beginning of that mitigation to where my entry was, okay. And then the 100% zone of the Fibonacci is my entry, okay. Boom. That's my target, okay. So I entered right here, and then boom, price drops all the way to the 100% zone, okay. So that is, if you saw the smaller accounts, that's $43, okay, small with the smallest lot size. But if you were crazy, you went crazy here, by the time you get here, you're probably like 200, 300. It just depends. And also on the way down, you would have added position, okay. Anyway, so let's get back to it. Okay, so 100% zone got hit, and now I'm assuming, not I'm assuming, but price is actually going to the 161.8. okay, so it's been struggling here for a while, okay. So what I'm actually waiting for, it probably might come back to this order block here, for our order block, before they can move down. But price can also just decide to fall from there, okay. I'm really okay with that. But if I get a, honestly, if I get a pullback to this order block, then that will really be interesting for me, because I'm gonna take it from here and then 100% zone, okay. So I hope that makes sense. Let me just give you like a few more examples. Now I'm gonna give you this example in, if you, let's say you want to day trade, okay, because this is ideal for like a swing trader, okay, because you'll be holding this trade for a long time until your profit gate hits, okay. But let's say you're not patient, okay, you want quick ins and quick outs, okay. With that same example, okay, look at this. If you understand market structure, you can really do anything, okay. So I marked that order block, okay. We got that impulse move, okay, and then we have that mitigation. So if we go to the lower time frame, okay, if we go to the lower time frame, look at this mitigation on its own, okay. This mitigation is an uptrend on its own, okay. This is also tradable. You can trade this as you can scalp this move up until it gets to your point of for your interest. But I wouldn't advise you to go for the 161.8. In moves like this, go for the 100% zone only as a target, okay. So look at this, higher high, okay, breach, okay, break a structure, okay, and then we had this area right here responsible for that break, okay. I always like to place my 50% line. This is really part of my plan, okay. So since this zone was found in the 15 minute time frame, I'd go to the 1 minute, okay, for entry, okay. Sorry, one moment, where is it? Boom, 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 boom. Sorry guys, okay, right here, okay, boom, and then boom, price fell. See, you can clearly see that. You could also start placing these lines just for your psychology, just to avoid entering trades early, okay. Lower low, lower low. You see market is failing to break these lows, okay. That means sellers are in this market, okay. Okay, sellers are in, boom, and boom, we got that sign, the first sign of buyers coming in, okay. I would have entered there, okay. I entered there. Stop loss maybe somebody like below here, okay. Just because sometimes they might come back for a second leg. They'll try to wick this level. They'll try to break below this zone a little before they can go up, okay. So be very conservative with your stop loss. But if you don't want to place a stop loss, you can place something like an alert, okay. You just place an alert here. If price touches there, that's when you get up, okay. But that's for like advanced traders, okay. Boom, entry, okay. And then obviously now for target, it's the 100% zone, okay. So let's see what happened. See, price went up, came back for a second leg, okay. They actually did not go below here, and then price just moved up, okay. Price just went up. Let's see if it hits the 100% zone, okay. Boom, right there, okay. TP hit, okay. So let me give you a new example, another example. This is the final example. I don't really like to make my videos long because I want people to really watch them from the beginning to the end. Okay. Sorry about that. Okay, boom. Market is going up. Another breaker structure right here. Okay. Then the area responsible for that break. Okay. Place my 50% line. Okay. Place my 50% line and then goes to 1 minute time frame. This is just quick scalps, quick in and out, in and out. You can probably get like 5 winning trades in a day. It just depends on you. Okay, cool. So look at this. Same thing. That's the 15 minutes order block. Okay, break a structure, and then that's mitigation. Okay, as the mitigation starts to happen, what you start doing is just place these lines. Okay, boom, and then you tell yourself, okay, sellers are still in control. Sellers are still in control because they're failing to break these highs. Okay, sellers are in control. Sellers are in control. Okay, and then boom. You see, that's the first sign of buyers. Okay, now buyers are in. Okay, as soon as buyers gets in, what do? You enter, right? Boom. Stop loss just below, right there. Okay, and then target 100% zone. Okay. Oh crap. Okay. Target the 100% zone. Okay. Buyers just showed up here. Okay. Then market moved. Okay. We came back a little this week. I mean, don't panic. When you enter like this, don't panic because you know that when they come down, they're probably going to stop at the recent order block right here. Okay. Which is exactly what happened. And when something like this happened, you can even enter again. Okay. Enter again. You do the same thing. Okay. You place your lines like this. Okay. Place these lines like this, lower low. Okay. Sellers are still in control. Sellers are still in control. They came back here. They dropped again. Okay. And then boom. And then they breach. Okay. And then they breach right there. Okay. That's the breach. That's your entry. Okay. You can enter again. And then look at what happened. Okay, that's the 100% line. That's the 100% line right there. Okay, boom. TP hit. Okay, that's your scalp. You out. You get 2 trades like this. Like look at this day. That day you had 2 opportunities, or even more. Like you had 1 right there. Okay, target hit. Second opportunity, target hit. Third opportunity right here. Okay, and then boom. Yeah, that's a breaker structure right here. That's a third opportunity. Boom, and then there was a 4th opportunity here, but that did not hit target. Okay, so just remember, like use this in conjunction with the higher time frame. But like by the time price got to here, you already know, because if you go to the 4-hour time frame, you already know that that's a 4-hour that's a 4-hour order block, and price just touched the 50% line. So now you can be scalping this on the way up, and then boom, you catch the swing trade. Boom. Understand? So guys, I don't want to make this video any longer than it has to be. I hope this was very informative, and yeah, so if you join me in my free Discord, like I have weekly Zoom meetings that really help a lot of people become profitable. I have students now that are making a bunch of money. Like I'm going to actually post those screenshots here. Okay, and yeah, so I'm also like running a 5-day boot camps in 2 weeks. So if you're interested in that, join the free Discord, and let's make it happen, guys. Okay, I want to help as many people as possible. As many people. This accident actually taught me that life is really short, and you gotta live your life to leave an impact. So that's exactly what I'm trying to accomplish. And yeah, so stick with me, join the free Discord, and let's make a bunch of money. Okay, guys. Cheers.